I've lost too much money trying to force the trades out. Think of longer term trades, or there are times where I'll sit there and go, do nothing. Let's see where price gets to before we look at the next action point.
You mentioned clarity, control, and purpose as your core pillars.
Clarity, come in, figure out where should things be heading. Then control is not sitting there going, it's retracing a little bit, I want to buy it back up, trying to make things happen. And then the purpose, what are we doing this for? Short-term income, not a trade that's going to make me $1 million.
The risks that you take on a longer-term trade, is that different?
Exactly the same risk for long-term, short-term. Every trade is the same. So if I take on more risk or less risk on a trade, it kind of makes it feel like this trade is more important or less important.
Hi, welcome to another edition of the Trading Battle podcast. This week we are meeting JinDao, a seasoned trader who began his journey during the 2008 global financial crisis. With over 15 years of market experience, he's known for blending deep macroeconomic insight with precise technical strategies. He founded a thriving YouTube trading community, hosting hundreds of daily market analysis live streams and mentoring thousands globally. JinDao is also a top-ranked author on TradingView, where his charts and insights are widely followed by traders and investors alike. Through his YouTube mentorship, he offers advanced training, tools, and trader support. Known for his no-nonsense, no-hype style, JinDao shares real-world lessons from the front lines of trading. Welcome. Lovely to meet you.
Thank you for that, Jason. Nice to meet you too. Great to be on the session.
Yeah. So you're in Singapore. I'm in Phuket, Thailand. We're not too far away from each other this morning. Tell me, 15 years in financial markets, what triggered that? How did you get interested in trading?
It's always been an interest. It's always been a bit of a passion. You know, not to sound too much of a cliche, but it started from young, where I just looked at the numbers on the back of the newspaper. Back then, we were still looking at newspapers, right? Looking at numbers on the back of newspapers, wondering what's going on, what's these numbers, what does it mean? And I missed the opportunities during the Asian financial crisis. I saw that happen, was too young to take advantage of that. And
it was late 90s, wasn't it?
It was late 90s, 97 if I'm not wrong.
Yeah.
Went through uni, did my economics and my degree in finance. And the funny thing is when you graduate from uni with a master's in finance, the next thing that happens is the global financial crisis.
Right.
So it was just a natural progression to think, hey, can I, I've always been interested. Can I trade? And let's try it and let's do it.
So with your economic background, was that kind of like, can I figure out this puzzle of what's happened in the global financial crisis and capitalize on it? Was that your thought process?
That was the initial thought process, but what I actually learned through the whole degree course and through my lectures as well was not so much figuring it out, but understanding what I don't need to know. Simplifying everything. Yeah.
Okay. Well, yeah, I totally agree with that. Trading is more about simplifying complicated processes. Okay, so talk me through that, because I mean, it's really interesting for you to be getting into trading at, probably, the biggest financial crisis in my lifetime. And I started trading in 1987. So I saw Black Monday and I saw the internet bubble and lots of things. But obviously 2008 was massive. That's really being thrown in the deep end. How did you survive?
I didn't. I started off trading and I've always had some sort of a portfolio in equities. I was building that through my uni time, and that was good and interesting. Financial crisis hit and it just got halved pretty much. And I like the trading action, so I got into FX. Trading in FX during the financial crisis would be making a lot of money one day. And if you don't follow the strategies, you don't follow the trend, the next day you lose it, pretty much double of everything you've made. So it was a learning curve on steroids, I would say.
Yeah, sure was.
Yeah.
Okay, well, you survived it. Well, you said, sorry, you said to me that it did cost you money trading through that period. Is that right?
Yes, I mean there were accounts blown. There was money made and accounts blown. Pretty much,
Sure.
it could be on the same week as well.
Right. Okay. Well, I can totally understand how that happened. It was crazy volatile. So you must have learned some really key lessons through that period that has allowed you to grow as a trader since then.
The first biggest thing that I took away during that whole period was it's not just about what you see on the charts, because it makes it so easy nowadays that you click a few buttons, you register for an account, and you have MT4, your trading view of whatever charts you want up there. And that's why I look at a lot of economics. I have the interest in economics, but if you're looking just at the charts, you're thinking it might be a good time to buy, or it might be a good time to sell, or it might be both at the same time. But when you look at the economics and you go, what's the overall driver? Where should it be heading to? Then you look at the charts and look for a good place to sell, or only a good place to sell. That's what you're looking for as a bias.
Okay, so you go into a trade with a macroeconomic bias and then use the technicals to maybe fine-tune your entry and your exit? Is that what you're saying to me?
Exactly.
Okay.
So bias based on economics and then timing based on the charts.
And therefore, I assume you're more of a longer-term swing trader. You're obviously not scalping because the macroeconomics wouldn't really be particularly relevant to that strategy.
Actually, I do both. So I like the trading action as well. A lot less now, but I used to get into a lot of scalping because I'll look at the news and go, okay, this news fits with the long-term macroeconomics to the downside or to the upside. Now let's get into short-term trades, opportunistic short-term trades that way.
Oh, okay. So you might be looking at waiting for a CPI number, for example. You have a bias. Okay, we've been in an inflationary environment recently, so that's been good for the dollar. Is that the kind of thing? And you're thinking, okay, if this CPI number backs up my theory that the dollar's going up, I'll then be ready to jump into a trade. That would be your trigger.
Yeah, I'll trade it to a resistance level, and then if it breaks that resistance, then it gets into the longer term swing trade.
Okay, great. So, I mean, it's complicated, but you've simplified it. You're primarily a trend follower, as long as the trend fits with your macroeconomic outlook. It's fairly a relatively simple strategy. Of course, entry and exit points are more complicated, but that's the basis of what you do.
Yeah, exactly, and keeping the risk managed as well.
So, of course, risk management is so important, and I'm sure you've been through your psychology issues like every trader as they go through that journey.
That's for sure.
Yeah. So when did you start to become profitable? After the global financial crisis had taught you many, many lessons.
See, the funny thing was what happened. I went through the financial crisis. I was living in Australia back then, right? I finished uni, lived in Australia, working. So I was trading part-time. I was only trading I would always say I'll trade from 9 to 12 o'clock at night in Australia. And that would often get extended if I was making money or if I wasn't making money. Or if the market was just moving, I would just keep going on. So I figured out that I could make a couple of $100 every night just playing safe. Then I thought, can I do this during the day as well? So I would sit in the office, I would be doing my work, I'll be trading on the side. And then I thought, hey, I can do this in the day, I can do this at night. Could I do this full time? And that's when I moved back to Singapore and started trading full time.
And what year was that?
That was in 2012. So it took about 4
you've
years.
Been working on it for about 4 years, and then you were consistently profitable enough and had two good strategies where you thought, okay, this is it. I can work for myself now.
Yeah.
Well, interesting. And at this stage, after 4 years, were you still doing the scalping in the evening and the swing trading during the day?
I've always done that up until maybe about 3 years ago.
Okay. And when you transitioned from having a job to full-time trading, how did that go? Was it an easy transition? or did you find some bumps in the road then as well?
It was hard. It was probably one of the hardest thing to do, because what happened was I moved back to Singapore. I got a small little office and I just thought, great, I don't need anyone else. I'll sit here with my 3 screens and I'll be happy. And I was for a short time, but it came to the point where all I did was stare at the screen from 9 a.m. to 9 p.m. every day. And it became so lonely. It became just numbers and little reports and charts that we're looking at. So it just became really hard. And you end up over trading because there's nothing else to do. You just sit there and you just keep thinking 1 more hour, 2 more hours. And then soon I was not trading well, not trading as planned, and not sleeping, not resting enough. That was hard.
I totally understand that process, and I'm sure people watching will understand that too. And because you transitioned from having a job, you thought that more hours in front of the screen equals more profit, but of course you end up doing boredom trades, which end up probably costing money. Okay, so interesting. I mean, you've gone through a process that most people go through, and it's interesting that it took you 4 years to get to that stage, which I think is a good amount of time. It's not something anyone's going to do. There's no shortcuts. And so how did you then move to the next stage where you were in the office and you needed to stop overtrading, stop boredom trading?
I started doing other things. I started teaching people how to trade. So I started saying, okay, I can't do this alone, but it'd be more fun to do it with more people. So I started teaching people how to trade, get them into the office to trade together. I started creating more content. I started doing other investments as well, just to take my mind off, not just stare at the charts, because like you said, we get into bottom trades.
Okay. Yeah, I understand that. I mean, I followed a similar path, so that's quite interesting. And so you enjoy that, passing your knowledge on to other people?
Absolutely. I mean, see, the thing about teaching and sharing and the financial markets is it doesn't disbenefit me to teach and share. So it's there, it's available.
Yeah, I must admit, I find a lot of satisfaction from teaching people and seeing them turn the corner and start getting positive results. And I'm guessing that through that process, did you find that educational for yourself? Did you learn more about trading, more about yourself, more about your strategy maybe? I mean, I found that I did.
It kept me actually a little bit more disciplined, because if I was trading for myself and I didn't have anyone to answer to, I'll do all kinds of funny trades. I'll over leverage or oversize. I'll do all kinds of things. But when you know that there's some following, your students are watching, your followers are watching, and you put up a trade and you go, oh, this is something I got into, and you go, that's not what you told us. That's not what you teach us. That's not what you're supposed to get into. So it builds that accountability as well. It's fantastic.
I love that. And I did exactly the same. Yeah, I felt far more accountable to my followers and subscribers than I did to myself. I'm probably a gambler at heart. I don't really know I don't know whether you are, but I like a small gamble. And even with the experience I have now, it's too easy to deviate a little bit and just not quite stick to the rules, have a little gamble. But this has stopped you doing that.
Well, I'll put that little caveat in there that everyone takes a gamble sometimes.
Sure.
You had a good month, you had a good week. You go, okay, the NFP is coming out. Let's get into a trade before the news. We think it's going to be good, or let's try something. So we're in the financial markets. You do take a little bit of a gamble sometimes. You just need to manage it well.
Yeah. As long as you don't lie to yourself and say that this is part of my strategy, as long as you're like, okay, like, as you've just said, NFP is coming up. I fancy a little bit of a gamble. I'm going to risk X%. If it doesn't work, it doesn't matter. Yeah. And you differentiate that between that and your strategy. It's when people are gambling and then telling themselves that they're traders.
When they make money and when they make money and they say, that wasn't a gamble. I knew exactly what was going to happen. And it doesn't work that way.
But as we know, predicting markets isn't really trading. That's just having a gamble. Okay, interesting. So how many, and you still have that ongoing process where you're teaching people, and do you still have people coming into your office to trade side by side with you?
No, so this happened right after COVID. I mean, after COVID, um, it became harder to get people into the office, right? So before COVID, I was very big on not doing it online, doing it all in person because I like the interaction. I like sitting around, hanging out with everyone. But COVID kind of twisted our arms and forced us onto the online space, which has its benefit as well. Because if not for COVID, if not for going online, I probably wouldn't be on this call with you right now.
Okay. Yeah. You reached a wider audience.
Yeah, I reached a wider audience. I broke out of the Singapore markets area. So right now we have it all on Discord. I do a live stream every day at 3 p.m. for my members. Well, when I'm not traveling. So I do a live stream every day just to share my buyers, my thoughts, my setups on the markets every day.
Nice. So people are able to earn while they learn your techniques at the same time.
Yeah. We don't always make the right trades.
Of course.
But is there, if I'm getting a trade, that's why I'll share out. These are the trades I'm looking at. Sometimes viewers will share their trades as well, and they get into better trade setups that I'm not looking at. So it's great.
Nice. So it's a really good community, which I think which is important because so many people I speak to, as you said earlier, trading is just a lonely job. You're sitting in front of a screen in your home somewhere. There's no one to interact with. And also you've got to be careful who you talk to because if you talk to the wrong people, they might sway your outlook or convince you to look at another strategy. You've got to be quite selective on who you communicate with.
Who you communicate with and what else are you doing while trading? Because one of the worst period I had while trading was I was actually looking on one of my screens at buying real estate, buying a property. And I just looked at it and I'm in Singapore, so everything is super expensive. And I go, oh, this is so expensive. I need this much money, need this much. And I just went back to my charts. I go, I need to make more money.
Ooh.
And that never works out well.
Sure. When you chase the money, that doesn't work out. So that was another lesson you learned then. Stay away from the property listings when you've got trades on.
And cars and watches as well.
All the boys' toys. You like this? Yeah. You like everyone. And so you're also a property investor?
I do. So I do invest in property as well. I look at trading as my daily cash flow kind of income. I look at the equity markets as my medium-term portfolio kind of income, and then property as the absolute passive buy, forget about it, kind of long-term income.
Okay, that's interesting. And all your properties are in Singapore, so they're relatively easy to manage.
No. They're overseas. They're in the UAE mostly. In Australia, really? In the UAE, in the UK. Singapore is just too expensive, unfortunately.
Sure. Okay. Well, that's interesting. How do you manage that portfolio of properties across so many different continents?
That gives me the best excuse to travel.
Okay, I see. So these are obviously long-term rentals that you have, so it's not too intense.
Yeah, so these are long-term rentals, things that you buy in good locations, you just hold and let it, rent out and take the passive income.
Okay, well, sounds like you've got that, a good little system worked out there. I've done something similar. I plowed my trading profits into a property, but the property takes up so much of my time. I thought, I'm glad to hear that your property is relatively passive income because mine isn't. Every day I've got problems. There's always something breaking.
No, so I buy new. I have to buy it off plan. I buy it new. I can't deal with renovations and all that. I look at two shades of white and it's the same thing. So
right, yeah. Okay. Now that's good advice to people who are interested in investing in property. So will you, for example, buy a number of apartments in the same development?
I try not to. So that's kind of like, in terms of trading, that's like buying the yen multiple times, stacking the trade. So if something goes wrong, it goes very bad.
Okay, so you'll diversify in different departments in different blocks.
Yeah.
Okay, and that's something, are you going to continue to build that out?
Right now, what I'm doing is I'm very bullish on the UAE. So I'm investing into the UAE. I'm also helping people invest into the UAE as well. So guiding them through their investments.
So not only do you teach people how to trade, you teach people how to invest in property.
Kind of replicate whatever I'm doing.
Right.
Yeah.
And do you have people who are not only following your trades, but also following your property advice then? They're making money from your trading and putting that into property that you're guiding them with?
Unfortunately, right now, it seems like it's two different markets. So, a property investor very seldom looks at trading because they want it fully passive, or a trader just loves looking at the charts right now before they would start thinking about, passive income on property.
Yeah, interesting. I put my money into property because I knew that, trading, if something happens to me, if I get hit by a bus, that's it. The trading income ends that minute.
Yeah.
And for myself and also for my family, of course, I wanted to have a revenue stream whereby we could still eat if something happened to me.
Exactly. That's the same thought I have as well. It's any day. And it's not just something happening to yourself, but the market could change.
Sure.
Trading online it's still quite new, but it could change very quickly as well.
Well, believe me, it does. And I'm sure you've seen that in your 15-year career. Market conditions change. And, I'll be honest with you, I'm struggling at the moment with the FX markets because it's difficult to find. Like you, I'm a trend follower. It's just the easiest strategy. Right, go with the waves. Don't fight them. And how are you getting on with that at the moment? Because, for example, yen pairs I'm struggling with. Dollar pairs I have been struggling with. Dollar's in a bear trend for 2025, but it's spending long periods of time trading sideways. How do you cope with those market conditions?
When it's choppy, I'm out. When it's
Really?
choppy, I'm out. So I will just sit there and go, either I do really short term, so my scalping kind of trades back to the news a little bit here and there, or I'm totally out. And that's why I just came back from a 2-week travel. I'll take the opportunities to go check out my properties or go travel around as well. So I love to travel.
Wow. Okay, so you're super disciplined. You're able to say to yourself, I don't understand what's going on. I'm going to leave it until things start making sense.
I've lost too much money trying to force the trades out.
Yeah. No, it's a good lesson, and I totally agree with you. And so how do you obviously don't feel obligated to come up with trade ideas every day for your subscribers. You're happy to say, guys, don't understand. Let's just leave it alone for a week or two and see how things develop.
Yeah, so I go through the major pairs. Often I'll say, okay, if it goes up to this level, it might reject and come back down. So we kind of think of longer term trades, or there are times where I'll sit there and go, do nothing. Let's see where price gets to before we look at the next action point.
Okay. And I assume your scalping strategy is more technically based than macro based, because obviously you're in very short term trades. Would that be correct?
Yeah. So it kind of still has to follow the macro overview, but at that moment, it's all technicals.
Sure. So the technicals give you the timing for the trade.
Yeah. For the entry and exit as well.
Sure. I agree. So can you run us through your technical strategy when you're scalping? What kind of indicators do you look at? Is it purely price action?
Okay. So when I'm trading or when I'm scalping, it comes down to, I've got my MACD, the MACD convergence and divergence. I've actually gone in and tweaked that, got it a little bit faster rather than the lagging indicator it is. So I look at that first as it crosses over. Firstly, it has to follow the trend. It needs to break a support or interim support or bounce off a resistance level. Then you go into your MACD, and the one that I really, really like is the Bollinger Bands.
Okay, I'm just wondering, could you share your screen and show us a setup, a typical setup? I'd like to talk to you more about Bollinger Bands, because I have tried for years to use Bollinger Bands, and honestly, I just can't get them to work for me. So I'm interested that you've made that one of your primary tools.
What's wrong with Bollinger Bands?
Well, you tell me. I mean, I'm obviously not doing it right, and I've spent a long time, especially and even recently, because as you've said, we're in these choppy sideways markets. And I'm thinking, okay, Bollinger Bands must be able to help me, but I probably got the wrong approach. Maybe you can teach me something.
So This is actually one of the setups that I was talking about with my members yesterday, right? On the Kiwi dollar, where's my mouse? On the Kiwi dollar, where I was saying that, okay, if it breaks, it was pushing up. If it breaks down from this point, we could look at further downside. Obviously, that didn't happen, so we'll take that away for now.
So you've got Fibonacci lines on there. They're quite key, are they, to your trading?
That's just to identify the short-term pivot, the short-term support resistance levels, the interim levels.
Okay,
I'll do that.
Okay. So, sorry, repeat what you said. If the market was to break the 23.6% fib, you would have gone with the down move.
Yep. So I'll put in that. And so what we were looking at before was something like that to the downside. And this was something that we were looking at yesterday at 3 p.m. So about that point there.
Yep.
So the reason for that was that, the TSRI MACD, my fast MACD was kind of crossing to the downside. So I was thinking if this continued to push down, we could see it break 23.6 and possibly even trade down to that 61.8 level.
Okay, nice. Pretty simple strategy. You've got to be on the ball with it, obviously.
Yep. And this is on H1 time frame.
H1 time frame. Okay. Do you go any shorter than H1?
Because I do it on a daily basis, I don't do it short on H1. What I do in addition to this is further live streams when the news comes out. Then we do a news live stream where we would be looking at trades or setups on the M15 or M5 kind of time frame.
Okay, nice. Yeah, that makes sense. And so talk to me about Bollinger Bands. How do you use those?
Okay.
I'm keen to learn.
Let's see. All right. So with the Bollinger Bands, what I have here, all right, is the 2 standard deviation, the 1, the middle, and the 1 and the 2 again. The way I use the Bollinger Bands is mainly to tell me when it's too late to get into a trade. So very often, this is at 9 a.m. in Singapore this morning, where you'll be looking at the Kiwi dollar and you'll say, okay, it's shot up, it's come all the way back down. You might be thinking that it's a great time to sell there. Because you've seen it shoot down. But when I've added in that dot, or when it's outside of the Bollinger Band, you know that it's going to pause. It's going to retrace a little bit.
The downside is going to be limited because it's already broken out below the lower band. Yeah.
Exactly.
Okay.
Right. So it comes back down a little bit before it comes right back in again. And then same thing when it's outside, upside is limited, it comes right back in again.
Okay. So you're actually using Bollinger Bands to avoid getting in too late on a move. Is that what you're saying?
And also when to get out of a trade.
Gotcha. Okay, that's interesting. Okay, now I can see how that is an effective use of Bollinger Bands. I was trying to use them for trade entry, and I just couldn't make it work. So I'm kind of reassured that you haven't found some secret system that I couldn't work out. I'm not quite the idiot that I thought I was. Okay, that's actually a really interesting approach with Bollinger Bands. That's really useful. I'm gonna look at that myself. It's a great idea. You developed that idea yourself, obviously.
Yeah, it's just something that I kind of went through and thought about and seen it work, especially during the news periods where you see it spike right down. And often, most traders will look at it spiking right down and thinking, it's going to keep going. And next morning it comes right back in. So through experience, through losing money, through making money, it's something that stuck with me to say, it's not a good time to get in or it's a great time to get out.
Wow. I like that approach. That's really interesting, something I hadn't thought of or used, and I would imagine that's quite effective at the moment because, as we said earlier, so forex markets at least are really just going sideways, and even gold has been. Well, I'm talking to you on the 26th of June. I think it's probably a good month or two where gold's just been trading sideways, and I'm really struggling with it,
especially for gold. So gold, I've had fantastic success with gold when it's trending.
Me too.
It comes to the point where I have to remind myself when it's sitting across and it doesn't want to do anything, don't get in because
Yeah.
That's where you lose a lot because it pops down, you try to click sell, and it comes right back in again.
Sure. And the problem is, of course, when in markets in those conditions, even if you get on a winning trade, the profit potential isn't, very good, because before you know what, you might be able to run it for 2 or 3 hours, but then sooner or later the market will reverse, wipe out your profit. You've got to be quick in, quick out. You can't be running things for too long.
You got to sit there and watch it. So there are trades where I would suggest this is something that you want to watch, not take your eye away from it, or these are trades that you would set and forget. When I'm sitting there, when I'm scalping or when I'm doing short-term trades, I lock the door, I ignore everything else. I'm 100% on the trade until it's closed. Then I'll go do something else.
That's actually a really interesting point. You've got, I always teach don't trade watch, but actually you're right. There are times when you have to trade watch and there are times when you shouldn't trade watch, and just knowing the difference in the market conditions or with your strategy is so important.
Yeah, exactly.
Okay.
But then it takes a bit of experience and time to get to understanding when to trade watch and when not to as well.
It absolutely does. Well, learning how to spot when a market is transitioning from a strong directional trend to a consolidation phase is a skill. And, of course, there's no sure way to know how to do that. I think you can only rely on experience, really. Do you find you have good gut feelings with things like that?
No, I'm terrible with gut feelings. I only look at when it's changed. So if it's been trending down and sitting across, I wouldn't even guess. I don't know whether it's going to go down further or whether it's going to pop back up. I'll wait till it breaks down or retraces and I go, okay, it's doing that. Now let's see what else to do.
Brilliant. So you're not predicting, you're not guessing, you're just waiting for the price action to tell you what you should be doing or what you should be looking at.
Yeah. Well, I could guess, but I'm never entering a trade based on that.
Yeah, I love that. Well, that's the mark of a good trader, isn't it? Realizing that you can't guess, you can't gamble, you can't predict. You're just there to react.
Yeah. I learned it somewhere. I can't remember where, but trading is all about reacting to the markets while investing. Yes, you can do a bit of prediction from there. So if you want to predict, go look at long-term investments. If you want to trade, look at short, medium-term reactions.
Yeah, I would really agree with that. I'm happy holding stocks and I don't care on the day-to-day. I'm in there not really for a technical reason. I'm in there because I believe in the business and the whatever. So then I'm not emotionally affected by the short-term moves, which of course I am when I'm trading short-term. Okay, interesting. So going to the swing trading side of things, how long would you hold on to a trade on average when you're swing trading?
Probably, I think I'm a terrible swing trader in that. I'm not a typical swing trader in that sense. So I don't have the patience for it. So about a week, the most.
No, it's still quite long term.
Okay. I thought swing is more like two weeks plus or whatever.
I guess it probably is. For me, a swing trade is 3 to 4 days, and beyond that,
a working week, I would say.
Yeah, I can't hold on to trades for longer than that for some reason. Maybe I need to be better at trailing stops. Is that a strategy that you use? Do you trail your stops?
No, I don't think it. For me, I don't think it's about the trading stops. And I actually really don't dislike trading stops. But it's just that there are that many trades that you can get into at one time because of leverage and margins. So when you hold on to a trade for 2 weeks or even 3 weeks, there might be chances where you're missing out on a lot of shorter term opportunities. That's why for me, I rather get out of that because it's not moving as quickly. It's lost a bit of volatility. I'll get into something else. I might come back to it after that again.
Okay, that's actually a really interesting point as well. There is an opportunity cost with trading longer term. You could be sitting there waiting for the move, and while you're doing that, you're missing out on other opportunities because your margin is used up a little bit. Is that what you're saying?
Yeah, and for a lot of people that I teach and retail traders, their capital wouldn't be huge. So
Sure.
they're trading a small lot size and they're holding for a long period of time. So they're not maximizing on that kind of returns, potential returns.
It's a really good point. It's efficient use of capital, because all of us have limited amounts of capital, no matter how rich you are. Yeah, really good point. Okay, so this is interesting. This is all the things that you teach your subscribers. And do you, Singapore, I would imagine, being a small country and a wealthy country, there's probably quite a thriving trading community. Is there? Do you interact with other traders in Singapore?
Actually, I don't really interact that much with other traders in Singapore. Although there is a bit of a community here, the culture is a bit different, not as open. I mean, I think it's a bit of an Asian thing. We're not as open to share, to talk about, finances especially. So I find that I get more openness, more sharing from people in Australia, from the UAE, from all around, actually, from the UK as well.
I imagine the UAE is a big financial community. So do you meet other traders when you go there?
Very often. So every time I'm there, I'm there for a week or 2 weeks. I would spend a block of it doing trading work, a block of it doing property work, and then a block of it just enjoying myself.
Nice. Okay. So you sound like you've got the work-life balance figured out.
Only recently. Before that, it was all trades and all work, try and make as much money, do as much as I can. But it came to the point where there's only that much time you want to spend from the screen. There's family, there are other things to do, there are networks to build and people to meet. So that came as a realization quite recently as well.
Okay. So are you quite strict with dividing up your time?
I wouldn't say so, actually. I don't have a timetable. I don't have a schedule that tells me, turn off the screen right now. But it comes to a point where, okay, we know what we need to do today. I need to play with the kids. I need to do this. I'll set up aside time for that.
Okay. So what would, you're obviously a disciplined trader. You're obviously, exercise a lot of self-control. I'm guessing that you do have some sort of routine. What would a typical trading day look like with you? You said you have a family. You have young children.
Yeah, 2 young kids, 2 young boys.
Lovely. What age are they?
6 and 8.
Ah, that's a good age.
Yeah. So to keep me on my toes, keep me busy.
Yeah. So it's important to spend time with them at that age. It really is. So tell me, talk me through a typical day or a typical week for you when you are actually at home and you've got a strong view on the market and you're getting involved.
Okay. So it's quite typical. It's quite typical where I would still be working in the office, at home office, from 9 to 6 o'clock every day, right? So morning, I'll send the kids to school, have my coffee, have my workout in the mornings, come in 9 o'clock, and I'll be in front of the screen, catching up on the news that I've missed overnight, getting a bit of a bias on what could happen. If there's a trade, get into it. If there isn't, and usually there isn't, let it run or let the markets do what it does. And then I'll go do my other work, which is building up content, doing educational content, doing calls like this, or looking at what could happen in the news or, with the conflicts that we have right now. Do that through the day. 3 p.m. have my live stream with my members. And all through the day, I'm chatting with my members on the Discord group. Live stream with members at 3 p.m. Share with them what I've researched through the day. Possible trade setups from 3 all the way to 2 the next day. Yeah. Then after that, 4, 5 o'clock, finish up, do some property work, and then take a break. In the evening, it's family time.
Nice. That's a good structure. You sound like you've got a good balance. And when you travel, I assume you're traveling on your own because your kids are going to be at school.
Yeah, that's right.
Yeah. Okay. And an average travel time is 2 weeks?
Typically a week. To Dubai, it'll be about 2 weeks because it's a bit of a longer flight, longer travel.
Okay. And which markets do you tend to focus? Do you focus on the same markets for your scalping as you do for your longer term trades, or is there a difference?
I only do the major pairs, the major currency pairs, just because I actually don't know why, but it's just because those were the pairs that I started off with back in 2008, and I've kept with it, and I just don't have the capacity, or don't want to add on capacity on trying to add on more pairs, because I don't think that every pair is the same. You got to understand the characteristics. You got to see how it moves, what makes it moves before you trade it. So I've got 9 different pairs to look at. I think that's more than enough.
Yeah, I would agree with you. That's definitely more than enough. But you said you also trade gold as well. You keep an eye on that one. And anything else? Do you look at the stock indices, or do you just leave that for your investing?
I leave that for investing.
Okay. Any other commodities that you look at?
Only gold. I used to dabble a bit in silver, but it's quite correlated, so I'll just pick on gold.
Yeah, sure. I must admit, I've found silver more difficult to trade. It's not trending quite as well as gold has been.
It's a bit more spiky, I'll call it.
Spiky is a good word.
Back, yeah.
It does. Yeah. You think, not a market that you want to be trading breakouts because the move is not sustained. Not at the moment. Yeah, I would agree with you on that. Okay, interesting. I haven't referenced any of the questions that we had written. I've been chatting away to you with my own questions. So let's go back to some of those. So you mentioned clarity, control, and purpose as your core pillars. So that sounds interesting. What do these look like in your day-to-day trading life?
So clarity, right? Come in, figure out where should things be heading. It might, dollar index just popped lower this morning or last night. It should be heading further down. Get that clarity instead of retracing back up. So that's the first one. The control is not sitting there going, it's retracing a little bit, I want to buy it back up, or trying to make things happen.
Sure.
So you're trying to get your clarity, your control, and then the purpose. What are we doing this for? Short-term income, not something that's going to be massive, or not a trade that's going to make me $1 million because I want to buy something else. So it's just short-term accumulation on trades. Okay.
And what kind of risk will you take? The risks that you take on a longer-term trade, is that different to the short-term trade? So, for example, is it 0.5% on the short-term trades, 1% on the long-term trades?
Exactly the same risk for long-term, short-term, because to me, every trade is the same. So if I take on more risk or less risk on a trade, it kind of makes it feel like this trade is more important or less important.
Yeah, I totally agree with you. I used to do that. I used to have a bias on certain trades, and I just realized that I was too random. The results were random. I would be convinced that this was a winning trade, and this one didn't look so good, but I'm going to do it because it fits my criteria. And the results just didn't prove to me that it didn't work when I had a bias. I was so surprised, and I'm still surprised at which trades work and don't work.
And it hurts twice as much when you're 100% convinced that it's going to make money and then it doesn't, or it doesn't make as much. It hurts twice as much.
True. And it hurts not only mentally or emotionally, but it hurts the account, because you might lose 3% on one trade and then, wow, okay, it's a big wall to climb to get the money back, and it's just not worth having that setback.
Yep.
Yeah. We've talked about this a little bit, but you developed expertise across Forex, stocks, and crypto. How do you tailor your approach to suit each market? Because you said to me earlier that, even just the Forex pairs have their own characteristics.
Exactly. So every pair, every instrument has their own characteristics, their own, little nuances that happens with the news or correlations. So it's really sitting there going, before I enter any trade, and if it's a new crypto pair or a new crypto instrument that I'm looking at, it's a lot of time sitting there watching it first, understanding how it moves before we start thinking of, and then actually doing a little back testing as well, or forward testing. Going on to TradingView, thinking that I would enter a trade and see how it plays out. in real time. Then after that, when I gain that confidence, then after that, I start entering into trades or real trades.
Okay, it's a very disciplined approach. And you've talked about, you mentioned crypto. You talk about, you obviously do trade crypto. Do you have favorite crypto markets? I know the crypto space is enormous now. You obviously couldn't keep track of too many coins.
It's so huge. I'm only doing Bitcoin and Ethereum at all. That's all.
Right. And you enjoy trading them. You've had some success.
To be honest, I've had good success, but I'm not very confident on it because a lot of times I don't know for sure why it's going up or how much it can go up by or why it's coming down, how much it can come down by. So I still feel that it's a very sentiment-driven commodity, if that makes sense.
Yeah, it was my next question actually, because when you're looking at macroeconomic fundamentals, okay, you can form a view pretty easily, and of course with crypto you can't. There is no macroeconomic fundamental.
And that's why I struggle so much with it. And that's why I struggle so much with it.
Right, it has to be purely technical based, really.
Yeah.
Very good. So crypto isn't. I'm guessing that crypto you don't trade very actively. Only when you see something that you really have to that you can't, that you have to trade, a setup that is so obvious.
It's setups that I get into, and I'm in. If I make money, I count my lucky stars. If I lose money, I go, well, I didn't know 100% of it. That's fine. So it's something that I, like we say, take a little bit of gamble sometimes.
Okay. And how does your discipline work when you're having a bad run? We all do, no matter how good you are. How do you handle a losing streak?
Terribly, right? So I would vent.
So do I.
I mean, it's only natural. And if anyone says like, "Oh, I'll go off and I'll go do something peaceful," impossible, but I think that it's hard. I would vent. I'll be angry. I'll try and figure out why I'm on a losing streak. Is it me or is it the markets? If it's me, then I'll be double angry. If it's the markets, I'll still be unhappy as well. But it comes down to you get angry, you vent, you figure it out, take time out. You have to kind of step away, forget about it. And it could be a couple of days. It could be, go do something else. Then come back as a clean new slate.
Yeah, it's really important to have that reset. Do you have a kind of rules that stop you trading and you say, okay, or is it just mindset where you go, oh, okay, I'm frustrated. I don't understand what's going on. I need to just get away from this for 2 days.
It's mindset. I don't have any specific triggers, but it's mindset. I play a lot of golf, and this is the one thing I translate from golf into trading, because you could hit a bad shot right now. The ball goes into the water and that's it. You've lost the ball. You can be angry at yourself. You can be angry at the weather blowing. But the next thing you have to do is go up there, drop another ball and take another shot.
Yeah, you've got to reset, calm down, deep breath, eliminate the thoughts from the bad shot and tackle the new shot.
Yeah, exactly.
Which is exactly what you have to do with trading. You're only as good as the last trade, or we have to remember that every trade is just one small part of the whole strategy of 100 or 1,000 trades. But it's difficult to do that, isn't it? We all get impacted by our losses.
And that's why the accountability partners in the community helps massively.
Yeah, it sure does. Do your subscribers turn to you when they're going through a bad streak? Help, what do I do? And do you help them with that emotional stress?
Unfortunately, not enough of them are reaching out, because
really,
a lot of times people, when they lose, they don't want to talk about it.
Sure.
A lot of times you see people posting wins instead of losses. But when someone posts a lot of wins, I would say, where are the losses? Because we know it happens.
And also, if you've had a lot of wins, that's when you start getting overconfident, over cocky, and you're opening yourself up to a big slap in the face. The market will slap you in the face eventually. There's no question. No matter how good you are, no matter how experienced you are.
10 times as hard.
Yeah. Yeah. Well, that's been a really interesting conversation, JinDao. It's been lovely to meet you. Thank you so much. I mean, there are just so many nuggets of information and help there for people who are watching, whether they are new to trading or whether they're experienced and experience the same problems that you and I go through every day.
Thank you for having me on the session. It was great. Love sharing those thoughts and ideas as well.
Yeah. And please tell me, how do people watching, how do they reach you for your help and advice?
You can head over to my website at jindaothai.com or find me on YouTube.
Well, guys, let's look up JinDao and see what he can do to help you move forward in your trading journey. Thank you so much for today. It's been a real pleasure to meet you.
Thank you, Jason. You too.
Okay, that ends another episode of The Trading Battle. Don't forget to like, share, and subscribe, and stay tuned for more episodes on the Trading Battle podcast.